Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Xinfin Network, aka XDC. So let's just dive in and let's talk about a few things. So first off, we have been discussing the connection with crypto to equities, and recently equities started to pump out a little bit. I know that right now on the 1 day percentage change, there's not much here, but if you actually look at the change in regards to like just the 1 day figures, you do see that the Dow Jones is actually up about 240 points almost. S&P up about almost 8 exact, but you do see even the high on the 1 day. Like these have been moving quite a bit, and even if you look at the low on the 1 day, we did pump up about almost like roughly 400 points or so on the Dow Jones. On the S&P 500, it's about like 50 or so, but it's still a pretty good gain, and you'd expect that crypto would follow it, but it looks like we stopped following it, and we're actually now in a bearish formation on Bitcoin, which is kind of concerning. Now, does this mean that indices are actually in a bull trap right now? Will they do a 180 turnaround? We don't specifically know. We just kind of have to watch the price action data and really kind of see what's going to be happening with a lot of these. I have said that these three are on major peak resistance, so we are watching that closely as the dollar itself actually kind of extends a little bit. On XDC, though, we have been accumulating a nice range on this. Recently, we did start to break out a little bit, going back to about like the 5th. After this, I did not buy any more XDC. We've just been kind of accumulating the range, going back on the 3-month span. The range has been around like this 2.5 cent zone almost to about 3 cents. I think that that's a perfect range to really kind of accumulate. We do sell the rips, though. I mean, like in this market, during a bear market, you kind of have to sell the bear market rallies to accumulate a lot more within your range. I know that that kind of sounds weird, but the best way to look at this is, if you go back to around June 30th, is when we really kind of bottomed out on XDC. It was at about almost 2 cents exact. We nearly almost 2x'd our cash flow here, almost to 4 cents or so. It was like 3.5 cents almost. That was a nice little rip. I mean, would I be taking my profit there? For most people, they wouldn't. But if you double your money, why not take your initial investment out and let the rest ride? That's how I look at it. And then you could reinvest what you took out, aka your initial investment out, and you could invest back again about like 3 cents or so. Kind of drop that figure a little bit, but also up your amount of XDC. That's what I've been kind of doing. I've been accumulating, but also selling a little bit of the rips. Then it's just like reaccumulating at those bottom levels. But we have been watching this market closely around XDC. We definitely have been watching a few updates. The XDPOS 2.0 beta is now officially live. We've talked about this on the last XDC video when it was, underway. They were doing some testing, and now we officially see that the beta is live for this, and this is great to see. There's been quite a bit of other updates as well. We've been more so kind of dead set on watching the trade finance area, and they do officially have a trade a token. Twitter, it's XDCTEQ, sorry. And if you guys do want to go check this out, you guys are more than welcome to. But we do see here, we are happy to announce that the first trades have been minted today and have been sent to the respective wallets. We'll continue minting as KYC/AML checks on each respective account are being completed. If you have passed KYC and made payment, please be patient just a bit longer. There's a huge and growing list of subscribers to go through. The team is working with laser focus to progress. And I love to see that there is a lot of demand for this. I look more so for like I'm really kind of watching to see if we will see a lot more institutions signing up for this, utilizing this token, more so kind of have some partnerships unfold from this as well. I'm very excited for this. I think that the work being done is definitely something special, and we definitely have been watching this space for a long time with XDC. Also, talking more so about this, we did see a law commission on Twitter. This is the Law Commission of England and Wales. We did see, digital assets such as non-fungible tokens, NFTs, and other crypto tokens have grown and evolved at a great speed. The law must adapt to accommodate them. We do see our proposals for digital assets aims to create a strong framework that offers greater consistency and protection for users and encourages further technological innovation. It's important that we focus on developing the right legal foundations to support these technologies rather than rushing to impose structures that could stifle their development. By clarifying the law, England and Wales could reap the potential rewards and position itself as a global hub for digital assets. And we have been watching this space closely from the UK as well. They have been really like on point with adopting crypto and really kind of moving towards like regulating it as well. We've just talked about this with Quant Network as well. They have been really kind of working with them closely. Or I shouldn't even say that they've been working with them closely. Like they have been really kind of touting Quant Network as an interoperability layer for CBDCs, digital assets in general. But the reason why we bring this up is, when we really kind of look at, the lawcom.gov.uk website, there's quite a bit talking more so about English law around the digital revolution, more so around like even trade finance as well. We do see here the Law Commission has begun work on 2 new projects to ensure that English law can accommodate 2 emerging technologies and could revolutionize commerce, smart contracts, and digital assets. And these are like the 2 areas that they are focusing on. This goes back to September of 2020, by the way. We do see here they will analyze the law relating to smart contracts to find any gaps in the law and identify reforms to ensure that the law can meet the growth in the use of this technology. They are more so about, talking about accommodating electronic documents, crypto assets, and other digital assets in a way which allows possibilities of technology to flourish. And I would honestly argue the fact that, like, I've said it multiple times on this channel, right? The UK is ready. They are more than ready at this point to fully adopt this technology. They are moving very, very fast on it. And we actually do see a quote here from the Law Commissioner. Smart contracts, digitized assets, and even electronic documents promise to revolutionize the way that we do business, digitizing existing processes, and in some cases, introducing entirely new concepts. There are, however, lingering uncertainties about whether and how English law can accommodate these. We believe there is a compelling case for reviewing the law in these areas to ensure that the jurisdiction of England and Wales remains a competitive choice for those who want to use and develop emerging technologies. And I do think that we're going to see a lot more areas around the world really kind of move in on this as well. The UK has been kind of ahead of the curve with this, as the US, as we all know, is stifling innovation within crypto tech. But the UK really wants to be a global leader within digitization. So they are definitely promising it. They are definitely moving towards it as well. Just going into a 1 year span to April almost, or I shouldn't even say a 1 year span. It was like a few months, but proposals to allow electronic documents would revolutionize trade. They are aware of this. They actually do see here international trade is worth more than £1 trillion to the UK and plays a vital role in the health the health of the domestic economy. However, due to legal requirements, trade still relies on the use of billions of paper documents, which is costly, inefficient, and the risk during global crises such as the coronavirus pandemic. And we've been talking about this, right? Digital trade and global trade is at the forefront of a market that's ripe for disruption. We've been talking about this for a while. We actually do see down here the International Chamber of Commerce has estimated that digitizing these documents could generate £25 billion in new global economic growth by 2024 and free up £224 billion in efficiency savings. So this is huge. And we do see electronic documents have the potential to make global trade more efficient, cheaper, and more secure until the law catches up with this relevant technology. However, these benefits worth billions every year will not be realized. Our proposals would bring the law and global trade into the 21st century, generating benefits on an international scale. And I think that this is great. I honestly think that when we really kind of look at this, this is a huge area to focus on. Like, yeah, it's worth well over $1 trillion in USD. I know that we're really kind of talking about pounds here, but it's well over $1 trillion in USD as well. And this is a huge area to focus on. Like I said, I know that like the market size for this is not like massive, but guess what? The market cap for XDC is not massive. We are worth about $425 million, $1.3 billion fully diluted. So we have a ton of economic growth for XDC in regards to market cap. But I have been really kind of looking at this token to hold long term because I do think that law will catch up soon. In fact, going back to March of this year, recommendations to allow electronic documents would revolutionize trade. The Law Commission has today published its recommendations and draft legislation to allow for legal recognition of electronic versions of trade documents such as bills of lading and bills of exchange. And again, they do mention that the trade is now worth, £1.266 trillion, up a little bit since the last time that we were discussing this, going back just to April of 2021, so almost like a whole year later. And we do see, if implemented, the reforms could revolutionize global trade and bring the processes into the 21st century. Parties would be able to conduct trade using electronic versions of the documents with which they are familiar without the need to enter into contractual workarounds. And again, when we look around this, like this is going to be a major impact area, and I do think that this is an area that is, like I said, ripe for disruption. I think that when we really kind of look at a lot of these areas, more so like, cross-border payments, trade documents, trade finance, like these are areas that we need to really kind of put a focus point on. And the funny thing about this is that they are preparing for use of NFTs, and we know who has been working with NFTs, Xinfin with TradeTech. And even going back to 2019, April 1st, we do see 14 banks join initiative to standardize trade finance assets. The reason why I bring this back up is you got to understand that this is all around the UK. For an example, we've talked about the TFDI for a while with Xinfin. We do see here, they were unveiled to standardize trade finance assets, aiming to broaden the appeal of the asset class to investors outside of the core banking sector. TFD is a trade tech initiative. The UK startup is building a platform to enable institutional investors to invest in the industry. And of course, all of the major banks are labeled here, as you guys do see. And the International Chamber of Commerce, ICC, United Kingdom, and the International Trade and Forfeiting Association will be observers. You think that these players that are like major names around this space, going even back to this, like we've talked about the International Chamber of Commerce understanding how big this market actually is, do you honestly think that they don't realize the potential of Xinfin? For an example, they even mentioned R3 Quarter down here, an initiative from R3, the Universal Trade Network. Again, that bridge to R3 is pivotal for, Xinfin's success as well, because again, these are major players within the trade finance area. Collaboration should be accepted, and also understand that like all of these major names are not competing, one-on-one. They are also going to be working together. Remember that. And we do see while trade finance is currently an attractive asset class for banks, we believe technology will unlock investment from non-bank investors by removing complexity and making the underlying asset data both more structured and even accessible. And this is a huge opportunity to create a global network for trade originators and liquidity providers to connect, interact, and even transact efficiently. And we do see thereby establishing trade finance as an easily accessible and attractive asset class for non-bank institutional investors. And of course, this is Andre Casterman, who is a board member at TradeTech, as well as even Xinfin. And this is a very large area to focus on. I think that this is huge. I think that all the connections to Xinfin are substantial. And last but not least, I just want to share with you guys XDC UK to grab the opportunity and be the first country in the G7 to fully digitize its trading system. Jurisdictions adopting the MLETR. And the reason why I bring this up, shout out to Crypto Nerd D for this, but this is more so around the ICC and the G7 itself. We do see Andre Casterman actually responding here and says the English law is widely used around the world for global trade finance. This means that once English aligns to MLETR, many banks around the world dealing on the legal basis will be offered the option to adopt digital negotiable instruments as per ITFA. And this is where DNI even comes in, DNI initiative, which yes, XDC is a part of. This is going to be a huge area to focus on. And like I said, we are very, very close. This was January of 2022, January of this year. Since then, a lot has unfolded, especially within the trade finance area and especially with Xinfin. I do believe that we will see massive amounts of banks flooding in to utilize this technology, specifically the Xinfin with TradeTech initiative. TradeTech is an absolute giant. Going back to August 4th of this year as well, TradeTech, how technology could enable banks to avoid the lending crisis of Basel IV. Increased capital requirements threaten to restrict banks' ability to fund trade finance deals and further constrain economic growth. And again, this is with TradeTech. Likewise, its streamlined securitization tools reduce complexity and seek to make trade finance investments efficient, liquid, and even transparent. And we talk about liquidity. We talk about XDC becoming the liquidity token for trade finance. I know that a lot of people will go back to Trada, for an example. What do you think is offering Trada the liquidity for this specific token? It's going to be XDC. We've talked about this. We've discussed this. It's a very large area to focus on. It's a very large, opportunity as well for Xinfin, and it's a huge opportunity for anybody who wants to be a part of this revolution in regards to digitization. And we do see down here like the implementation of Basel IV is set to commence in January of 2023, and with the clock ticking, firms are grappling with their plans. However, Basel III has already placed tight restrictions on banks active in trade finance lending, and so the worry is without adequate preparations, Basel IV will further amplify the problem. This is a big area, and it's a big problem. By January 2023, we don't have much time left, and we actually do see down here that, however, some regional variations, the European Commission and the Bank of England later pushed the EU and UK deadlines back to 2025 amidst concerns that banks' ability to lend is crucial to post-pandemic recovery, so more time was needed to prepare. So we actually do see that like Basel IV itself got pushed back a little bit. So, with a few areas pushing it back, we might see a full-on pushback all the way to 2025. It could very well be possible, but I do think that these banks are rushing. I think that they are streamlining the process of, trying to find some sort of process out there that could not only help with, liquidity issues, but also even, efficient, trade finance tools. And we've talked about like the cost with Xinfin. It's a very low cost to actually implement this technology and utilize this technology. It's a revolutionary technology for the trade finance area. And we even see like the ICC being mentioned yet again. They highlighted how they could cause damage to banks in regards to, just like Basel IV, saying they may have severe unintended consequences for the provision of cost-effective trade finance to the real economy. Like, we need something that is cost-effective in regards to the trade finance area to bridge this major gap. And again, we do see up here the widening trade finance gap. They're talking about how this is a $1.7 trillion gap itself, how Basel's capital constricts sit at the heart of the problem as well. And here we do see down here, like, a large part of the gap results from SMEs in emerging markets, and given Basel IV's impact, it will be difficult to address through additional lending or credit. In the absence of increasing funding, solutions have emerged, such as the possibility of co-financing and greater digitization. And who do you think trade finance is working with? Xinfin. In fact, they were the first ones to bring up an NFT, trade finance transaction. So when we look at this, they are at the forefront of this issue, and we actually do see down here that the World Economic Forum expects it to increase to as much as $2.5 trillion by 2025 in regards to the trade finance gap. This is a huge market to fully disrupt, and I'm telling you guys, this is growing rapidly. I know that $2.5 trillion doesn't seem like a lot in regards to like when we look at like cross-border payments with XRP at $156 trillion, but this is still a very large gap for something like XDC to fill when we actually look at like the fully diluted market cap sitting at about $1.3 billion, with the total supply being $37.7 billion, with the actual circulating supply being $12.31 billion. It is substantially lower in regards to token supply than XRP or even some other major ISO 222 tokens. So when we actually look at XDC's upside potential, it is pretty great. We've talked about this in the past as well. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day, beautiful night, wherever you guys are in this beautiful world. It's been Nick. Peace out, guys.